That's very funny to hear yourself referred to as venerable. Is that to do with age, or is that to do with religious qualities? Perhaps I'll eventually move up to being beatified and then probably achieve sainthood. So anyway, is the team all here? Yes, good. So there's a bunch of questions that the guys are going to answer, and I think they're going to be interesting. So let me get right into it. Now, the first one's for Jeff. Why are the gold and silver stocks struggling? That's a question we'd all like to know the answer to.
Sure. Well, I think if you asked that question a year ago, a year and a half, 2 years ago, when investors started getting worried about it, well, they would point to political risk was on the rise, and threats of nationalism, rising taxes, rising royalties, and all of that is true. It's still true. Some other people would point to rising costs, both CapEx and operating costs, and they have been going up. That is true. That's been a drag on the miners, I think. As Frank Holmes points out, there's been a lot of share issuance, so that's been a drag on the stocks as well. On a per share basis, production's really not increasing that much, even though there's been a lot of M&A over the past 2 years in the sector. So all those things have contributed to it, but what I think is probably one of the biggest issues is the analysts themselves. So you have all these bank and brokerage houses that have all their own analysts, and they all make their own gold price predictions and estimates for the next 4-year period. Now, they've been wrong every year since 2001, but they always project that the gold price is going to fall over the next 4-year period. Since the year 2000, they've been dead wrong. Sometimes they think the gold price will stay stable for a year or even go up. But over the next 4 years, every single time since 2001, they think the price is going to go down. So if you're an institutional investor or a hedge fund manager, why would you buy a gold stock if the price of gold is going to go down? You wouldn't. So these same analysts have also been projecting that oil costs are going to rise, and they're sometimes right about that. But energy costs are, give or take 10% of a producer's costs. So therefore, if margins are going to get squeezed, why would you buy a gold producer? So what I think is happening is these analysts continue to project to the large institutional investors that the gold price is going to fall, so the institutional managers stay on the sidelines. They don't buy because they don't want to stick their neck out in case they're wrong. Now, I think this also explains why that's going to turn around someday. I think they will come back in. They'll be forced back in because the gold price will be going higher. They'll have to rectify that situation. They will come back with a vengeance. And when the institutional world moves into our sector, I think that's when we really start to see stocks get exciting.
All right. MARIN, this is on one of your favorite topics and one of mine. You all may know, I think that uranium is the safest, cleanest, and cheapest form of mass power generation. But the question here for MARIN is, what are your near-term thoughts on the spot price of uranium in the next 12 months? And what is your favorite uranium recommendation?
Okay, in the near term, uranium is going to go sideways, maybe even down, touch $40. The reason is the ConverDyn, the enrichment facility in the U.S., is shut down for another 15 months. So there's a little bit of a supply building up in U3O8. But that's where the opportunity is, because UF6 is in a shortage right now. Basically, you make UF6 from U3O8 plus SWU, and the facilities, the nuclear facilities, need UF6. So moving forward, in the long term, you're looking at HAU agreement being re-signed. That's the agreement where the Russians sell their nuclear warhead material downgraded to the U.S., which makes up 50% of the American consumption of uranium. The difference here is the Russians aren't going to just deal with Americans. They're going to sell to the Chinese and the Indians, the Koreans, and also Saudi Arabia, which are all actively building these reactors. So in the longer term, right now, the 2018 forward spread that utilities are buying delivery of uranium for 2018 is $68. The utilities wouldn't be paying that if they didn't think that in 2018 it'd be worth that. And I think if you're a lower risk investor, because of the the ARB opportunity right now. UF6 is a screaming bull market that nobody is talking about because most of the companies in this room don't know what UF6 is, but the facilities do. And there's a Uranium Participation Corp, which is in our newsletter. It holds actual physical UF6 and physical U308. It bought all of that about 5-6 years ago, and it's trading at a 20% discount to the spot price today of the metals. So I think that's the low-risk way to play it. We just sold Denison and or Fission, sorry, at a plus 100% gain. Dev and his team have done a fantastic job there, mainly because we made over 100% gain in 2.5 months. That's why I sold, no other reason. Risk mitigation. I think that UEC, which is in our 10-bagger club, is worth, and that's about it.
Okay.
Stay away from these juniors that have no money.
Louis. Louis probably travels 200,000 miles a year all over the world. And the question is appropriate. Where in the world is mining safe today? Which jurisdiction should we avoid at all costs?
Okay, I'll answer that, but I want to first just sort of second what Jeff said a little bit differently. He looks at the big companies and he has the institutional view in mind. I'm more the retail guy. And I remember when I first started working with Doug in 2004, people thought that $1,000 an ounce of gold, what a dream come true that would be. Someday, when we have a 1980 style spike, we'll beat $800. It'll be $1,000 gold. These were the outrageous bulls calling for this fantastic future. So, of course, gold blew right through that, hit 1,500, and has not returned to 1,500 since. But 1,500, it's 50% more than the wet dream of the miners 10 years ago. And so what I'm saying in a slightly different and less numerically oriented way from what Jeff says is that nobody, even the people, the gold bugs, the people in this industry, really thought that the prices that we have today were sustainable. If the industry itself doesn't really believe that gold is worth this much, how is anybody else going to believe that? What about the broader world? That's why people think gold is in a bubble, even though the reasons that have made gold go up point to it going much, much farther up. So I don't believe gold is in a bubble. I think, all of the reasons that we've given and talked about so much, and Jeff has talked about, all of this is true. So why don't people get it? Well, because...
But don't forget, where is mining safe today? Anyway,
yeah, that's right. Okay, so, all right. So it's, anyway, I'm just saying there's a reality disconnect. People just don't get it. They don't understand what's been done to the money supplies of the world. They don't understand what's been done to the paper money of the world. And one day they will wake up and we will have our day in the sun. Where in the world is mining safe?
Asteroids, according to the guy before us.
Well, that's pretty close to my answer. My answer would be nowhere.
Yeah, that's absolutely right.
Even the best mining jurisdictions in the world, Quebec and Ontario, even Quebec raised the royalties. Nothing is sacred. There's no place that is completely safe. That having been said, obviously going to a place like Bolivia, which has shown its willingness to nationalize anything, or South Africa today is pretty darn scary. A lot of Africa is pretty scary. There are pretty obvious places that you want to avoid. And then it really becomes a question of risk mitigation. Since no place is safe, how much are you going to pay per ounce to invest in Ontario or Quebec? And if you can get a project of similar quality for 1/10 the price in Ghana, well, maybe that's worth the Africa risk. So my point is you really can't avoid risk, but you have to price it in to whatever it is you're buying.
Okay, we've taken 1/3 of our time, but we've only covered 1/6 of our questions.
We'll see how far we get.
Okay, the next one's for Jeff. What do you think of Germany's announcement to remove its gold from New York and France?
As probably most of you know, Germany's announced they're going to repatriate up to 1/5 of their gold reserves, all of what is stored in France and part of what is stored in New York. You think, why in the world would Germany do this? Germany is a major, they're not a banana republic, they're a major ally of the United States. They're a very strong economy. It's not like the gold is unsafe. at the New York Fed and these other places where it might be stored. So why do they do this? Well, they told us why. Quote, a preemptive measure in case of a currency crisis. So these are not stupid people. We sometimes poke fun at central bankers for being late to the party, but they're not stupid. They see what's coming. They can see the writing on the wall. And what I think this means for all of us is that we are 2 chess moves away from capital controls. Because if this catches fire, and now the Netherlands is talking about doing it, if central banks don't trust each other and everybody starts pulling their gold home and this thing catches wind, the impetus for this could grow, countries could clamp down, and the end result could be some kind of ban against gold exports. So if you want to store gold in Germany or Switzerland, you won't be allowed to do that. You won't be permitted to ship gold out of the country, okay? I think we're 2 chess moves away from that happening. I think that's what's coming. So the implication being that whatever gold you want to own and wherever you want to store it, you need to do that now.
All right. Marin, you've talked about the Putinization of the European energy renaissance. So what's the story on that whole scene?
Basically, the story is Europe is addicted to Russian and Northern African, Middle Eastern oil sources, addicted to Russian natural gas, addicted to Russian coal. In my talk, we talked about how brutal it really is for the Europeans, and they've invested no infrastructure to modernize their producing oil fields. So with Putin buying up uranium resources around the world and, you know, in funding Sri Lanka's uranium program now, the Europeans are going to have no choice but to develop their own resources if they want to stay competitive. You can't have expensive electricity to make things and have cheap products, right? And for the European Union to get its act together, it needs cheap electricity. And right now, it does not have cheap electricity. So the big move is to bring modern North American technology to producing existing old fields and enhance the production. And you're going to see an energy renaissance in the next 24 months. We're the first ones to talk about this. 6 years ago, we were the first ones to write a shale report about Europe potential. It's massive now, and this energy renaissance is going to be big. Pay attention to it.
Okay. Louis, the junior mining sector looks like a medieval battlefield at sunset. So what would you buy right now? Would you buy the really beaten up little companies, or would you buy the bigger quality junior explorers? What kind of stuff would you go for?
Well, in a way, the carnage of the battlefield is a good thing. The strongest knights are left standing, and they're pretty good ones to put bets on. So don't buy anything that they don't have money in the bank. They need to have enough money in the bank to do whatever it is they say they're going to do to add shareholder value. Whatever it is they propose, whether it's drilling, whether it's development work, whatever it is, whatever they say they're going to deliver, they need to have the money to do it. If they don't buy it.
All right.
Or maybe buy it when the financing is there. As far as what to buy, look into your heart. I always say this, what kind of investor are you? What are your risk tolerances? If you're really not that much of a gambler or risk taker, look to the producers that have growth pretty much baked in the cake, and there are some out there, and there are some that are on sale. If you want those 10-baggers, you need to understand that you're going to take losses. That's okay, and you know, exploration can do that. A good exploration company with good management, great projects, and cash in the bank to work on them, that's the way you go after those 10-baggers.
All right. Marin, this is the $64 question. What do you think the price of oil and gas is going to be in 12 months?
I think natural gas in North America is going to go sideways and down for the remainder of the year. Heavy oil is going to go lower in the first half of the year in North America. So I would stay away from any of the higher cost producers in North America. But I think, you know, if anything happens in the Middle East, all bets are off. So assuming that nothing happens in the Middle East, I think that oil, where it is right now, is a very healthy price for the producers. So there's no reason for it to go any higher unless something, you know, drastic happens in the Middle East.
So Jeff, if I'm right about the Greater Depression. What does that mean to gold, in your opinion?
Well, if we do have some kind of depression, and I hope you're wrong about that, but if we do have some kind of severe recession or depression, it can take one of two different forms. It can be deflationary or it can be inflationary. And as probably many of you know, we flow on the inflationary side of that. And if there is some kind of serious rise in inflation, gold and silver are clearly going to benefit from that, and the stocks will follow them up and even outperform them. And the reason we're basically believe in the inflationary argument is in the contest between inflation and deflation, inflation always gets another turn until it wins. So it's a bet on that. And I think we could have some kind of severe recession or stagflation like we had in the 70s, where gold and silver rose dramatically. The stocks outperformed them 2 and 3 times. The producers did, the juniors much more than that. So we could have some kind of scenario like Doug is predicting, and gold and silver and the stocks still do well.
Mm-hmm. Yeah, that's right. You got to bet on those helicopters that Bernanke has talked about for so long. MARIN, I've been reading your reports on coal. Everything has been spot on. You said to stay away from coal, but is it now time to jump back in coal?
No, it's not. Stay away from any coal companies, especially the ones that say they're going to build a thermal coal deposit in North America. They're not going to be able to permit it. And right now, the price that they're getting for thermal coal, it can't compete with natural gas. Now, if you want met coal and you think I'm wrong, the way to play it would be Teck Resources. I think it is so overvalued. They're the world's second largest met coal producer. And you see, these big companies in Canada, the pension funds and all these big funds, they're mandated to own X amount in the market. And because Teck is liquid, they own this, and because of that, it's overvalued. So I would be very careful with the coal producers and any coal exploration companies.
Okay. Jeff, what are the best gold and silver stocks to buy right now?
Well, on the producer side, that's pretty easy. Our mandate has been to buy the next big producer before it becomes one. I think that lowers your risk because as they produce more and more, their market cap is probably going to go up, which means their stock price is going to go up. So there's a margin of safety built in there. But that's where your best bang for the buck is going to be. There's also been a clamp down on costs and efficiency, and rightly so. So we want companies that are going to grow, but are also going to do it efficiently and be cost conscious. And those are easy. The first one is Eldorado Gold. They have the largest growth trajectory of any major gold producer in the world right now. They're going to grow 150% over the next 4 years. Low cash costs from all operations, conservative management. I really like that stock a lot. It's at a great price. It's down in the $12 range right now, so it's a straight up buy right now.
What was the symbol?
Eldorado's EGO in the NYSE, and it's ELD in Toronto. Thank you. Eldorado Gold, EGO in the U.S. and ELD in Toronto. Yamana, AUY in the NYSE, and can somebody tell me the Canadian symbol? I forget. Thank you. Yamana is the CEO there, Peter Maroney, was just named the 65th top CEO in the world. He was the only gold-producing CEO named on that list. This is a very well-run company. They're putting 3 new gold mines into production over the next 12 months. Low cash costs, low political risk. This company is a straight-up buy. It has risen a lot, so I'd look for a pullback to buy that, but I would definitely put it in your portfolio. Just real quick, First Majestic Silver. They have the largest growth trajectory of any primary silver producer going right now. That's a straight up buy. When gold and silver stocks dropped off here recently, First Majestic and Yamana did not. There's a lot of strength in those stocks right now. They're going a lot higher though, in my opinion. And probably the third one or the fourth one, if I could buy just one stock on the producing side, it would be Franco-Nevada. That's a clear-cut buy in my opinion. It's up around 55, 56. FNV is the symbol. Royal Gold has bigger near-term production growth, but Franco-Nevada has bigger long-term growth. They'll still be growing in attributable production by 2017, and that's at current levels without any further M&A. So this is a stock I feel so comfortable with, I even put my mom's retirement money into it. So those are my 4 top picks right now.
Okay. And MARIN, what is your favorite oil sands company, and at what price?
I don't have a favorite oil sands company because I think they're going to struggle moving forward more. Right now, the differential, you know, the Americans are buying oil from Canada for the half price of what they're buying the same oil from Venezuela. So why would I buy this company in the oil sands right now? I would wait 6 to 12 months, and then I would start with some of the bigger permitted built CapExes, and you probably want to stay away from the conventional producers. They're just too high cost, so look for the SAGD producers. But right now, we've been saying for a year to stay away from them, and they've been a disaster.
Okay, good. Louis, straight up, what's your top pick today?
Well, the whole approach of a speculator needs to be a basket approach. So that's a question I hate answering, because one pick, putting all your eggs in a basket, one basket is just not a good idea. And as I was saying earlier, you know, you could invest in a really good company, but if you are a low risk tolerance investor and you put your money in a highly volatile junior that actually ends up succeeding, chances are you'll be short before it succeeds, because it may well fluctuate 30% on a bad day. Some fund just decided to bail and whack the price. Nothing wrong with the company. I'll throw out some ideas, though, and adding to what Jeff said. I think in the silver sphere, sort of the no-brainer stock of them all has got to be Silver Wheaton. It's not cheap necessarily, but if you believe in silver, you know, the leverage they offer to silver is just undeniable. It's a very simple no-brainer, and it trades in the U.S. and Canada under SLW. I like emerging gold production stories. I think one of my top picks right now is a development story called Carpathian Gold. The symbol is CPN here in Canada. I don't think it has a formal U.S. listing. What I like about it is it's trading down like a penny stock, but they actually have the money in hand to build their first gold mine, which they're doing in Brazil. They're trading at a discount to asset value for the mine that they're building. But on top of that, they have a giant monster gold deposit in Romania. You know, what is the appropriate discount for Romania these days? It's a bit of a scary place. I don't know. But you get all of the gold in Romania for free. So free is a pretty good price, whatever the risk is. There's an enormous amount of upside there that you get for free. And they're building the first mine in Brazil. I've been there, I've looked, you know, I think they're doing a good job. On the junior exploration side, I really like the people pursuing the JV model, the people using other people's money, companies like Almaden that have a lot of pokers in the fire, and Almaden happens to have one very hot poker of its own down there at the Ixtaca discovery and their Tuligtic property in Mexico. It's a great way to leverage your speculative upside with other people's money. So there's a few examples.
Okay. MARIN, I signed up for CER based on the East Africa report. The stock has went from $1 to $14. Are there any other companies in the region?
Yeah, there's lots of companies, but we're not recommending any. So, no.
Good answer. Jeff, do you have a prediction on gold and silver prices?
Yes, they're going higher.
By that?
No, really, just giving a price projection, especially when a certain time frame is really for entertainment purposes. They're going higher. You know, I may be fanatical, but I think gold is money, and it's there to protect our standard of living. The price should be higher, and it will go higher, and so buy it now before it breaks out of its trading range.
Okay. MARIN, will fracking be banned in North America or Europe?
No, it will not be banned in either area. The EU just came out and said, you know, of the 27 countries in the EU, it said, look, we need this, we're going to do it. The difference, though, is getting the permits to run a frac. So even though they said you're allowed to do it, within each region, you got to be very careful. So permitting a frac well is very, very difficult in Europe. In North America, it's now the unconventional has become conventional.
Okay. Louis, are you leaning towards gold or silver?
Yeah, we often get this gold-silver question, and you know, which one has the more upside and so on. I have to say, if Doug is right, and we're looking at not just exiting the hurricane, the eye of the storm, eye of the hurricane here, but the Greater Depression really kicking into gear, that's got to weigh more on silver in the near term than gold. So when silver gets whacked, when things are really bad and silver gets whacked, I like it for the additional upside because it will follow gold. It is the other precious metal. Right now, I have to say, I'm actually looking more for more gold plays. For some reason, not deliberate, just the way the picks have worked out. We have more silver producers in the portfolio right now than gold producers. So I'm really focusing more on looking for more gold producers.
Okay. Well, this has worked out quite well. We've got 3 minutes left and 3 questions. You're a very responsible group. Jeff, what are the catalysts that will push gold to the next level, in your opinion?
Well, I need more than 3 minutes to answer.
But you can't have more than 1 minute.
I think we could be caught off guard by rising inflation. I think that could be a catalyst that sneaks up on a lot of people, especially the general public that's gotten used to deflation. I think another interesting catalyst could be the Chinese announcing all of a sudden over the next year or two that they've acquired some fanatical number like 4,000 tons of gold in their reserve position. If you remember, they don't announce it only when they feel like it. The last time they did it was 2009. So if they announce something, especially if it's more than what the imports have been going through Hong Kong are, then that could be that could move the gold price. Sounds fanatical, but that could move it $1,000 in 6 months just by that alone. Some kind of adverse monetary effects, some kind of geopolitical outfall like MARIN was alluding to, all those things could be catalysts, but I think the number one reason to own it is because of the currency devaluation. Our currencies are going to become worth less and less, and that's why you got to own gold.
Okay. MARIN, how do we get the Casey Next 10 list? How did you compile the list?
Sure. The Casey Next 10 list is the top 10 individuals in the resource sector under the age of 40. You have geologists, mining engineers, promoters, businessmen, the investment bankers. It's basically the who's who in the zoo. Basically, Doug made millions and millions of dollars with guys like Robert Friedland and Lucas Lundin and Ross Beatty. Who's going to be the next Robert Friedland? That was the list that we've compiled, and each guy had to have at least one major market success. And the list is free on our website, and we're actually going to compile the market index versus the next 10 index, and it's quite shocking. It's Pareto's law. This is the top 4% in the sector. You know, why waste your time with the rubbish when you can deal with the Olympic athletes of our business? So it's free on our website, caseyresearch.com.
Okay, and the last question. Louis, can you give us a penny stock that might be an all or nothing, cheap enough for play money, long ball, home run?
It's that one pick question again.
I know. People like those questions.
Okay, there's one stock right now that literally is a penny stock. It's actually just doubled for our people who dared to average down. It went from 3 cents to 6 cents. So it's still really cheap. It's called Goldport Resources. It's a Guyana play, and they got whacked with everybody else when Guyana Goldfields produced a feasibility study with a low return on their large high-grade deposits. So everybody decided that Guyana didn't work. So they're about to put out their first resource estimate. So the company has nothing right now. 43101 compliant, they have nothing. Next week or 2 weeks, whenever they put this out, it's imminent. From their last press release, we know it's coming out. They will have something. You know, they go from nothing to something. And at 6 cents a share, you know, whatever the value of that something is, it's likely to be more than the company's non-existent market cap right now. And there was previous work there. There was an old Coeur d'Alene resource at, I think, 0.7 grams per ton with more than 1 million ounces of gold. So whatever the appropriate Guyana discount is, you know, we're looking at a large gold resource. So I don't know. I mean, even at a huge discount, this could just pop a double overnight. I don't know if it's a 10-bagger like Africa Oil or whatever, but there's a penny stock that could be an all or nothing. If it disappoints, you know, they don't have much money, they're not going to be able to go forward. But if they deliver a resource the market likes, that could be one for the record books in terms of short-term gains.
Yeah.
Oh, sorry, the symbol is GPO. I don't think they have a real U.S. listing. There might be a pink sheet, but in Canada, it's on the Venture Exchange. It's GPO, and people are starting to go. We have to go to another event, so we need to go. But
Yeah, we gotta go.
But,
Well, thank you very much. I can only say that I'm much happier asking questions than answering them. So thank you for being here.